Good morning students, welcome back to my channel. So today I'm going to explain you a sum on interest on capital from Partnership Fundamentals B.B.Dam book AHSEC. Okay, I have taken illustration number 2. Okay, so here you see on 1st April 2020 A and B started a partnership business with capitals of rupees 40,000 and 30,000 respectively, sharing profits and losses equally. Okay, so A and B share profits and losses equally. Okay, and their capital contribution is 40,000 and 30,000. They are entitled to interest on capital at the rate 5% per annum. So interest on capital, okay, this amount of capital is 5%. Profits for the year 2021 before charging up interest on capital amounted to rupees 12,500. Okay, so this line is not required in this sum. Okay, with this amount nothing can be done. Okay, no calculation is obtained. Okay, next calculate the amount of interest on capital of each partner. Okay, so it is asked in the question to calculate the interest on capital of each partner, that is A and B, and you have to pass journal entries for interest on capital where the capitals of the partners are fixed and number 2 is floating or fluctuating. So it's very easy. You have to calculate interest on capital for B, for A on rupees 40,000 at the rate 5% per annum. Okay, so capital is introduced on 1st April 2020. Okay, and year ends on 2021. So for 1 year it is 2000. Then for B on rupees 30,000 at the rate 5% per annum for 1 year it is 1500. Okay, now you see when capitals are fixed, journal entries will be, you see here I have discussed the pro forma. When the capitals are fixed, two accounts are prepared, capital account and current account. In the capital account, okay, whatever capital amount of capital is introduced, okay, and withdrawn is entered. Okay, and in the current account, okay, the interest on capital, okay, is entered in on the credit side of the current account. Okay, sorry, in the credit side of the current account. So what will be the journal for interest on capital? Interest on capital account debited to current accounts of two partners, it is A and B. Okay, so here you see interest on capital account debited to A's current account to B's current account. You have to put the amounts, it is 3,500. Okay, here you see being interest on capital credited to partner's current account. Now you see this interest is transferred to profit and loss appropriation account. Okay, so here you see profit and loss appropriation account debited to interest on capital, being interest on capital transferred to profit and loss appropriation account. And when capitals are fluctuating, okay, the interest on capital is entered in the capital account. Okay, in case of fluctuating capital, there is only one account prepared, that is capital account. Okay, so interest on capital is entered in the capital account itself. So interest on capital account debited to A's capital account to B's capital account. Okay, you can see the pro forma. Okay, you can see the pro forma, okay, of capital account, okay, when capitals are fluctuating. Here you see this is the pro forma when capital is fluctuating. Okay, this is the opening balance of capital, additional capital if any introduced, interest on capital. So interest on capital account debited to capital accounts of the partners. Okay, when the capitals are fluctuating. Okay, so here you see interest on capital account debited to A's capital account, B's capital account, being interest on capital credited to partners capital account. And lastly it is same. Okay, the entry is same as it is in the case of capital when it is fixed. Okay, capital when it is fluctuating, okay, the last entry will be same, that is it is transferred to PL appropriation account. Being interest on capital transferred to PL appropriation account. Hope you have understood. If you like my video, please subscribe to my channel. Thank you.